Yo, what's up, Banter fam? Today I will be discussing how to survive a bear market. It's obviously quite a volatile time in the markets at the moment. If there is further downside, I want to make sure that you guys are protected and that we can survive a potential bear market here if we go lower. And also, to extend on that, if we make a push to the upside, I want to make sure everyone's portfolios are well positioned to take advantage of a potential crypto rally. So basically, this show is dedicated to giving you guys the portfolio theory to succeed in this market. I'll be giving you examples of weightings that I would use to weight portfolios, as well as some stablecoin farming strategies to be able to earn passive income in this market. Then, halfway through the show, I'm going to get you guys on with a call-in link to be able to come on, ask questions, and join the live show. So it'd be awesome to be able to chat with you guys live on the show. I'll be posting that link when we take call-ins soon. Let's get straight into the show. So we did see this big wick a few hours ago on Bitcoin. I thought we may be reaching into some bullish territory here. We almost hit $42,000 overnight, and then we came straight back down. So obviously the market right now is having trouble making a decision on where it wants to go. And this is because the FOMC, or the Federal Open Market Committee meeting, is this afternoon in America. So that will determine to what extent the rates will be increasing in terms of interest rates. The market right now is pricing in a 25 basis point increase, which means that if we are in line with market expectations here, I'm expecting this to stay pretty solid. If the language used around this basis point increase is more hawkish than expected, potentially we could see a move to the downside. And if it's more dovish, which is bullish for the crypto market, then we could see a move to the upside. So what is happening right now with Bitcoin basically acting like a stable coin is that we are ranging in this range because the market hasn't made up its mind yet what the expectations are. So this meeting is very big news, and that'll be happening in around 12 hours, that meeting, and we'll get a bit of clarity on the market and where we are headed. Because obviously, with the stimulus being removed, it is very important to see what the basis point increase is to dictate the interest rates going forward. So that is very important. But we did see some interesting moves across equities markets overnight. So the USD was flat, gold moved slightly lower, and US equities were also green. Asian equities are also following. We obviously saw a lot of Chinese stocks take a major hit over the last couple of days, and they're now showing a little bit of strength here. So that is also worth noting. This guy says he smells a risk-on shift in TradFi, and that is true to an extent. I'm seeing a slightly more positive stance coming out of traditional finance right now. Hopefully that can reflect across the crypto market as well, because that would be bullish for the crypto market. But once again, all eyes on this FOMC meeting in 12 hours to determine the rate hike increase. That's very, very important. We must look at the Bitcoin dominance as well. We saw that massive Bitcoin rally a few hours ago, took the dominance up with it to over 44%. We have now come back down to this channel of the 43% range, which I talk about pretty much on every show because that's where we've been ranging for a long, long time here. So we are struggling to break out of this range, but that is also good because we are getting a nice accumulation zone in terms of our farming. You guys know I'm big on DeFi. I'm big on farming my assets to earn extra yield. That is what the show is all about, yield maximization. So whenever we move sideways, it's not a bad time to accumulate via farming, but we do need more macro clarity before we can significantly be entering into positions in this market right now. But I'll talk about in this video some strategies for you guys to be able to do that as well. In terms of Gecko, we are seeing a little bit of green across the board with alts today. That is a positive sign. We have Ethereum up 5.3%. We always like to look at the Ethereum price moving because it is the biggest altcoin. So we do need some strength coming into Ethereum to let these other L1s free. So we are seeing a push up in the Ethereum price overnight as well. And also the Luna price has obviously done great over the week. It's come down slightly to $88. It's basically at the exact same level as the bet, the $11 million bet that I talked about on yesterday's show that took place. It's back at $88. So in a year's time, the Luna price is probably the most intriguing one right now, with a lot of speculation about where this price is headed. But I'm still very bullish on Luna long term. And I think that if we can get back down into the 70s, as Sheldon showed on the show yesterday, that would be a nice accumulation zone for Luna. But I know a lot of you guys own Fantom as well, so I want to talk about the Fantom price here because we did see a nice push up in Fantom to $1.16. Obviously, there's been a lot of red with Fantom over the past couple weeks, coming down from 160 pre-Andre news. In combination with the Andre news and the market situation, we did see Fantom hit $1.04 at its lows, but it is up 11% today to $1.16. So it's good to see that there is support around the dollar region. I always said that the $1 region would be a major level of support, and because it was a major level of resistance previously, and it's good that we are seeing support there. So a nice little relief rally for Fantom holders as well, which is a positive sign. DeFi Llama now, wow, we've seen some crazy movement across some altcoins here. I don't believe that this is true. It says Avalanche is growing at 101% for the day. It looks a little bit glitchy to me. If it's true, I mean, that would be incredible. But it's showing that Joe is up 700% for the day, which I don't think is entirely correct to $11 billion. Once again, if this was a true reflection, then we'd all be going crazy over AVAX right now. But I think that is a glitch. But if we look overall at the market, the TVL today is actually up overall. Once again, I don't know how much the Avalanche price increase is affecting this, but we are seeing a little bit of green here. We saw Chronos up. We saw Dot up, an ecosystem that I told you guys to keep your eye on a week ago is continuing to grow up 12% for the week. So that has been a good play. Also, Elrond, Nia. We're seeing some of these cheaper L1s that are lesser priced on the market and they're still a good price, but they're starting to push up a little bit in terms of adoption. So we are seeing an interest from investors to start getting into these other L1s that were previously in other projects like Fantom, AVAX, Solana. They're now showing a little bit of interest in these smaller caps like Nia and Elrond, which I really like as L1 plays. And we are seeing a nice bit of growth here. So that's probably something I need to cover on the show within the next week, and go through some of these smaller L1s and look at some farming strategies there, because there are major opportunities in this 10 to 20 range here on DeFi Llama. Obviously, there's great opportunities across Fantom, AVAX, etc. But there is some also really intriguing plays here in these other ecosystems. Quickly, I just want to talk about 1inch, who are actually coming on as a show sponsor soon. Obviously, we love the product. They are one of the cheapest DeFi aggregators in crypto, so it's a great product to be able to swap. As I said, they're coming on as sponsors, which is really awesome for the show. And they just released this P2P peer-to-peer trading feature, which allows you to trade to another wallet address directly. So I think that is a really nice feature that they're rolling out. Obviously, it means that you remove the risk of getting front run by miners or bots. So that is a positive sign. Cool little feature there. I haven't seen P2P swapping across many other protocols. So I think they're one of the first to implement that. But let's get into some strategies in terms of being able to fight a bear market. Obviously, we have seen some bearish momentum. The market is down a significant amount from a few months ago, and it's been hard for a lot of our portfolios, myself included. I've taken a massive hit on my Fantom projects. I know a lot of you guys have as well, so I do feel your pain in regards to that. But I must say, DeFi is still the best way to play this market right now. The importance of earning yields when the market is low is so high, because what it enables you to do is continue stacking. It is risky right now, I admit, to be pouring in crazy amounts of fresh capital into this market, but by stacking coins and accumulating quality projects through farming, it's giving us an option here to continue to earn yield. So I want to talk about a few ways that I'm structuring my portfolio to do so, and then I'm going to be taking live calling questions from you guys to come on and ask any more questions you have about portfolio theory, any projects you want to know about, etc. So that'll be cool. But let's talk about the first important part of building a portfolio, and that is stablecoins. Stablecoins are so important to have as part of your portfolio. Look, I know it's boring, and the temptation to ape into this market is high. I mean, even I admit over the past week, I've probably deployed more stables than I would like, because there's always so many perceived opportunities in crypto. But at the end of the day, it is important to keep roughly 20% plus of your portfolio in stables, especially at this time, since we don't have confirmation that we're not in a bull market yet, since we don't really know where we're headed with all this market uncertainty. Right now, the safest strategy to play is to have at least 20% of your portfolio in stables. Now, you could go a lot higher than this. You can go 20 to 50% plus. I know some people in the office even have 50 to 70% or even all of their portfolios in cash. I'm talking about you, Kyle. So a lot of people have large stablecoin positions right now, but at the same time, I prefer to hover around the 20 to 30% range in terms of stables. But you don't just want to keep your stables sitting in your wallet. That is pretty boring, right? You want to have a large amount of your stables staked because you can continue to earn yield on stables. I won't make this video about stablecoin farming, but I do want to just talk about Anchor because that is still the best way to farm stables. You guys, Anchor at 20% is still the best risk reward way to farm stables in crypto. I have not found to this day a better stablecoin farming platform. There is a few nice competitive ones. I think we have 100 Finance, Platypus Finance is great options, Kujira, but I do like the option here on Anchor. 20% is still just a great risk reward on UST. So I always recommend using Anchor to farm stables right now. We have seen from Remy Teto, however you say this name, 20% on Anchor protocol will last for at least 2 years before needing to adjust, and even the APR will remain the highest in crypto. So yesterday I did touch on the sustainability of Anchor, but we are seeing theories, and I also would largely agree with this, that the Anchor protocol return of 20% is going to stay for quite some time, at least a few months, potentially to a couple years. So I do think that it is a relatively safe, compared to other DeFi protocols, way to earn yield on your stable. So if you do have cash in your bank account, or maybe you have cash sitting in a wallet, USDT, USDC, etc., maybe consider moving it over to Anchor protocol to earn your 20%. It is a great way to earn yield on your stable coins, and I highly recommend it. So I don't think these yields are going anywhere anytime soon. Once again, I have tutorials on this in the past, but to do this, you will need a Terra Station wallet, and you simply come onto the Earn tab here and you click deposit. As long as there's UST in your Terra Station, it is a fairly simple process to conduct. Kwon did come in and step in and kind of indicated to us his thinking behind having the high APR on Anchor protocol. And he said that basically this was a way to incentivize liquidity to come into the protocol. So what they're doing is they're having a very high APR relative to other stables, 20%, and then they're using this to bootstrap liquidity and create one of the largest lending markets in DeFi. He said, this is exactly what I wanted Anon. So it's a very calculated move from Luna and the foundation to be putting money into the Anchor yield reserve to top it up, because they know that keeping the incentive high to farm on Anchor means bringing more participants into the Luna ecosystem. So he is confident that they can maintain this rate for the short term as well. And he also said if they have to, they can move to dynamic rates. There's an article here which discusses maybe Anchor moves to a dynamic rate. So based on demand for borrowing and supplying, they can alter the APR from 20% to potentially a lower APR to make this more sustainable long term. So stablecoin farming is very, very important as well. The next most important thing when it comes to surviving a bear market and setting yourself up for success long-term is portfolio allocation. At the end of the day, the percentages that you allocate to certain projects and certain projects in varying risk levels is going to go a long way to dictating exactly how much money you can make in this market and also how much downside risk you're mitigating. For example, if you're really heavily in risky protocols and the market drops, you're going to be a lot worse off than someone sitting in layer ones, Bitcoin, Ethereum, etc. On the contrary, when the market goes up, you're probably going to make more money sitting in small caps than you are sitting in some of the bigger caps. So basically what portfolio allocation is all about is striking the balance of having the right amount of risky tokens, the right amount of safer tokens, and then getting a nice balance so you're still benefiting from the upside to the optimal extent, but you're not getting hammered on the downside when the market drops like a lot of people have recently. So the DeFi Edge did have a good thread on this that he did a few days ago. This was a very big thread on Twitter, and it has some good advice, some of which I slightly disagree with, but also some of which I do applaud as well. So I'm going to go through a few of the points here and critique them based on my opinions. He said, in a bear market, your job is to survive. And I agree. Our job right now isn't to go too crazy with jumping into small caps. It is to survive, maintain the majority of our capital, and then once the market picks up, really set ourselves up for success. He said defense wins championships. I also agree. It's very hard to make money if you lose your entire portfolio. Like, that's just the reality of it. You need money in crypto to make money. So that is also a very good point. He does give a few examples of portfolios here. He has a conservative, a moderately conservative, and a moderate portfolio. He recommends 50% of your net worth in stables, of your crypto portfolio in stables, and 50% in the blue chips. For the conservative portfolio and for his moderate portfolio, he says he likes having 30% in stables and then the rest spread amongst layer ones. Now, in my opinion, this is an extremely conservative portfolio. Yes, if you are extremely bearish right now and you think Bitcoin's going to 20K, then maybe following a portfolio like this is a good move because this is a true bear market portfolio. I doubt this portfolio here will die in a bear market. Like, there's basically no way that happens unless the stablecoins go to zero. However, this portfolio here is limiting significant upside. So even the moderately conservative portfolio as well is limiting upside. If we do go back into a rally, you're not going to make much money holding a portfolio like this. So it's all about risk reward in your personal situation. I don't mind this moderate portfolio, but only holding 10 tokens in a portfolio is not enough to be able to diversify. I always recommend holding probably between 20 and 30 coins in your portfolio. And you can do even more if you have more time to dedicate, but at the minimum 15, because by only having 10 projects, I guess the risk is you're going to be spreading. Your conviction is too high in a very small amount of projects. So what can happen is there'll be other narratives you'll be missing. So when we look at portfolio allocation, we did have the Degen-ish portfolio that RUNE made for all of us. Now, this is quite a Degen portfolio here. I probably wouldn't recommend this to a T at the moment just because there is still a little bit of uncertainty. But if we look at a portfolio, this is kind of a nice level in terms of the amount of projects sitting in the portfolio and also the amount also the allocation to certain projects as well, because we do want to take advantage of percentages as well as looking at what coins we hold. So, for example, in this portfolio, you'll be holding a lot more Bitcoin, Solana, and AVAX than you are Looks and UOS. So the higher risk tokens, you want to have lesser weightings towards, and the lower risk tokens, you want to have higher weightings towards. So that is very important as well. I'm going to be taking call-ins in a second for people to join the show live. So I just did a tweet on my Twitter that you guys can use to join. And I think Idan will also be posting the link in the chat right now. So if you guys want to be able to join the show live and ask me any questions relating to portfolio theory, the current market, any coin you want to ask a question about, I'm happy to take those questions. And that will be awesome to get you guys in and also answer questions relating to that. So that is the Degen-ish portfolio right there. This sample portfolio is kind of risky, but not risky, sorry, it's kind of conservative, but I do think it is a good option for some people as well. The DeFi Edge goes on to say that he recommends the alt layer ones as the best risk reward plays in crypto. And I would agree with this actually. I think the layer ones right now are some of the safest bets in crypto because what layer ones do is they give you exposure to an entire ecosystem, but they also don't have a crazy amount of risk attached. So what is happening with layer ones is I think it's quite positive because holding layer ones enables you to accept less risk, but we've also seen over the last year, they've actually been the strongest performers. So despite having the higher market caps, the layer ones have pumped a lot harder than some of the ecosystem tokens under them. So I think they are good options as well. Just in regards to you guys joining in the call-ins, I'm going to be taking questions in a second. Make sure you have your camera and your microphone connected so I can add you to the stream. When I'm ready, I will add you to the stream manually to accept any questions, and that is the way to go. So I'll start taking questions here in a second once I get my screen set up and we can get straight into it. First question here. How are you going, brother? I think my mic's not working here. Might be the same issue we were getting yesterday. We can't hear you either, bro. You can't hear him either, Adam? No. We can't hear your mic. I think sometimes there's like a mute mic toggle. So I'll just remove you. I'll join back in a second to get you on as well. Remember, guys, you do want your cameras on here so we can have a proper conversation as well. So you'll need to accept your camera as well. Just let me get my screen back up here. Cool. So right now in this market, it isn't the time to be aping into these ecosystem tokens. It is definitely the time to be staying a little bit safer, and the L1s are a great way to do so as well. The time to be in the ecosystem tokens is more later down the track. We do want to be diversifying into some of these riskier protocols. For example, if you own Fantom, it's always good to have the ecosystem tokens underneath to be able to farm and earn extra yield. However, you do want to play it a little bit safer in a very volatile market at the moment. So let's have a look at what I mean by this, and let's give an example in regards to Fantom. Fantom right now has obviously gotten hit a lot recently, and I do feel bad for a lot of people, and also myself included, because we have lost quite a bit over the last few weeks on our Fantom holdings. But I think there is a good lesson in this, and it's a nice bear market lesson, because we are learning now that we don't want to be too heavily exposed to these riskier ecosystem tokens. What we want to do is we want to position ourselves in the L1. So if you are holding mostly Fantom as part of your Fantom portfolio, you would be a lot less exposed to downside risk than if you are holding some of these riskier tokens. We did see some of these riskier ones, for example, solidly drop like 50 to 80%. I know it's saying 3.9 here, but that is largely because it was a couple of weeks ago that the Andre thing went down as well. But if you're holding Fantom, you wouldn't be as hit in this market right now. So that is why I usually recommend, in terms of playing an L1, I would have around 60 to 70% of your total Fantom ecosystem position in the L1. And then I would have a small percentage, maybe 20 to 30% in the ecosystem tokens, and farm with them. Because that means if the market goes down, you're less exposed to risk. Jake, I'm adding you to the stream right now. I can actually hear you this time. How's it going, brother? Can you hear me? Can you hear me, Adam? Yo. Man, that's there's like gunshots in the background there or something. I mean, everyone that seems to be joining either has a camera or an audio issue at the moment. So I'll just keep on talking about this Fantom price. And if anyone has decent audio or a decent camera, that can also join as well. You posted your question in the chat. Let's just do that as well, guys. If you have any questions and you don't want to get on the stream in terms of having your face on the stream, let's just do questions in the chat as well. Okay, read me the question.
He said, I'm really attracted to LooksRare for the ETH rewards. Is this a good play?
I do like LooksRare. I mean, it's one of the biggest markets in the space. I'm not an investor in LooksRare personally, and I'm not sure if I necessarily agree with the valuation. I think it's very highly valued, but I think it's also a solid bet in the space, and it's quite safe. So, what was your exact question? Do you like the LooksRare ETH rewards? Is this a good play? I mean, if you have conviction in LooksRare, then yeah, it's a good play. But I wouldn't necessarily be going crazy over it personally. I'm not a massive fan, but I mean, it's decent if you have conviction. That's basically the gist here. What about Rose? I'm just going to get some questions up here as well. I do like Rose. I do think it is a great protocol. So the thing with Rose is that it is essentially a security L1 as well. So it plays into this security narrative, and it also has great potential in terms of their metaverse partnership with Facebook as well. So I do like Rose as a play. I've been looking at accumulating for a while. I did miss out a little bit, but we have come down and we are consolidating at better levels right now for entries. Obviously, with these coins, they are going to largely follow the Bitcoin price. So if Bitcoin drops, Rose could have further downside right now. So it's not a stage where I'm looking to accumulate heavily. But in terms of a project that's on my watch list, it's definitely there. And in terms of building a nice privacy security portfolio that follows that narrative, it's definitely one that I would be keeping my eye on in terms of Rose as well. Thoughts on Juice Finance? I really like this one. I've actually been researching it at the moment. Look, it is high risk right now. It's a fairly new protocol, and there is a lot of hype around it over the past few weeks. I think the time was probably to get in was probably a few weeks ago when it was first kind of rising to prominence on Twitter. But I do think it's a decent play. I just can't recommend buying into these highs right now. So if you're in, I would be holding for sure. I think it's a good project to hold. But if you're not in, I wouldn't be looking at getting in at this very moment, obviously, as it's a slightly riskier play. I mean, look at this. Basically, in 2 days, it's pumped. There's no way you can be buying this token either. So that is a riskier play. But as long as you are farming, I mean, that does take a bit of downside risk down as well. Yo, let's check the private chat for some questions as well. Most of my bag is in Tomb/T-Share. Should I swap some Fantom and stake in Terra, for example, or just let it sit there? So this is kind of how I'm playing the narrative with Fantom right now. I always like to diversify across multiple protocols. So with my Fantom stack, I do spread it out across 4 or 5 DeFi protocols. So I have a little bit in Fantom through Terra. I have a little bit in Fantom through Tomb. I have a little bit in Fantom through Beats. And I like to spread it out across multiple platforms. So if if your question is most of it's in Tomb T-share, and if all of your portfolio is in T-share, I'd definitely take some out and put a little bit into Terra, because you're probably too exposed to one protocol if you're all in T-share Tomb. But if you only have a little bit of your portfolio, I'm very happy to keep it in. I haven't sold any of my T-share. I haven't sold any of my Fantom Tomb LP. I'm still staking that in Reaper right now, and that is what I am playing in terms of Fantom. I'll take a few more questions as well before we wrap up here. Chaos, I see you all the time, brother. You're a big fan of the show. I appreciate all your support as well. You said on wrecked alts such as Sunny or Rubic, I'm literally doubling my position as it only costs about 10% of my original investment due to such a heavy loss. Sensible approach. I mean, you've got the logic spot on here when it comes to buying dips and not pumps. It's always much better to be buying after huge periods of a declining narrative here, like with something like Sunny after those Solana alts really took a big hit. The problem I see here is that even if projects are down 99%, it doesn't mean that they can not halve again. Like, they can essentially go to zero, right? So even if they're down 90%, they could still go down another 99%. That's just the reality of crypto. So I wouldn't say that necessarily because something's down that makes it a great buy by any means. But in terms of looking at a chart like this Sunny chart right now, which is very, very negative, it suggests to me that we are getting some decent opportunities to enter. But once again, it can always go lower, and this thing won't move until Bitcoin moves. So yes, DCA accumulate. I always recommend dollar cost averaging, but I also recommend taking a measured approach as well. What is your favorite gaming token? This is a good question. My favorite gaming token, and the one I have the most conviction in, is actually Ultra. The reason I have the most conviction in Ultra is because I'm more of a DeFi guy. I'm more interested in farming and optimizing DeFi yield, and I'm not necessarily too concerned with going crazy on individual gaming projects. That's Hustle's domain. I super respect that approach that he takes. And if you guys are really keen on gaming, I can't fault that approach either. But in terms of UOS, I like it because it's giving me exposure to multiple gaming projects. They have over 30 projects launching on their platform. They're essentially going to be the Steam of gaming. So I do like Ultra the most as a play just because it's safer. The same logic I could apply to Gala Games, Good Games Guild, some of these other larger platforms that are going to be launching multiple games. So the way I play gaming right now is investing in the studios, and the studios that have multiple games under their belt, because then you're accepting less risk. Because if you invest in a single game and it fails, then there's obviously a lot of risk there. So just off the top of my head, Ultra's great. Vulcan Forged is great. They're two very, very good projects that I'm personally invested in, but I'm not a massive gaming guy. I'm more into the DeFi stuff. Gun, how are you going, brother?
I'm good. How are you? Can you guys hear me?
Good. Wow, look at your living room. It's an amazing grand piano you've got behind you there.
Yeah. So I got a little bit of a question about ThorChain and Luna. Like between the two, the past few weeks, there's a lot of hype between these two ecosystems, and I think like the narrative behind the integration between Luna and UST coming into ThorChain, that's also picking up right now from what I've been seeing through Twitter, and also the recent synthesis that ThorChain also recently announced. Do you have any opinion around like these two ecosystems, and what should we be looking forward, or should we be adding to our bags right now? What's your idea around this?
You're spot on the money, bro. I think ThorChain is a really, really good play. It's been something I've been stacking for quite a while. So we were hearing rumors earlier in the year. It's March now, but back in January, we were hearing rumors of the UST implementation. I think when RUNE was, if I can get the chart up here, when RUNE was down at like $3, like in the absolute dumps. So I was honestly accumulating around here. I knew this narrative was going to pick up, but at the same time, there's still a long way to run in terms of RUNE. I think the UST integration's massive. massive, and the narrative in general is just massive. I mean, ThorChain, it's basically the only place that you can swap for native assets. It's like if you want to keep custody of your assets instead of using wrap tokens, etc., like ThorChain is the best platform to be able to do so. Personally, in terms of using ThorChain, I find it a little bit janky. It's a little bit confusing. So I think they do need to really upgrade their UI and their user interface to be able to adopt more users. But in terms of playing this right now, I think it is one of the best narratives in crypto. So RUNE is a must-hold token in my opinion. I've been holding for a while. Your question of whether we should be buying now, I would probably suggest wait for a pullback. I mean, it's just hard to suggest aping in at $7. Even though it was like, even though it's pumping in the narrative, it's got the Lunar integration. I'm still not that interested in $7. I think around the $5 to $6 range is my next accumulation zone, but that's a personal preference thing because I've been accumulating since $3 to $4. So it's a personal zone right now. But dude, you're on the money with the narrative there. I got to do a show on RUNE soon.
Okay, thank you.
Thank you for your question, bro. Let's look through the chat and look at some other questions right now. Let's have a look. Fake backdrop, fake whale. Whale. He's a RUNE whale, guys. That's what he is. Stake UOS or HODL. I'm currently HODLing my UOS right now. Thoughts on DeFi kingdoms as an investment? This is an amazing question because Hustle did a show on this last night and he went through what his personal plan is in terms of stacking DeFi kingdoms. I think it is a big narrative going forward, because what they're doing is they're deploying the protocol on Avalanche under something called Crystal Veil. So it's a new DeFi Kingdoms launching on AVAX. It's extremely bullish for Avalanche because it's bringing new users over to the chain and it's really setting Avalanche up for success in the gaming space in the future. But DeFi Kingdoms itself is also a great play. So what you can do right now on Trader Joe is you can actually stake your Jewel tokens with AVAX to earn Crystal tokens. And those Crystal tokens will enable you to be able to earn income once this new Crystal Veil thing launches. I think Hustle did an amazing show on that last night, but we're definitely going to cover this in the future. In terms of stacking this Jewel token, it's starting to get to interesting levels. It's honestly one of my favorite gaming projects. I don't own any, but it's something I'm looking at changing very soon because I think it's really interesting. It's kind of like DeFi meets gaming, GameFi, but what it's doing is it's giving you an experience to be able to use a DEX in a new way with more gaming underpinning it. Because right now, if we look at the gaming market, if we look at the DeFi market, a lot of these swapping sites are kind of boring, right? You come in, you do what their function to do, like swapping on Spooky Swap, but you're not benefiting, it's not retaining users as well, right? Something like a DeFi Kingdoms, it's a DEX, but it's also an extremely engaging way to interact with DeFi. So it appeals to that audience that maybe isn't so interested in DeFi, and it's kind of bridging the two communities together. So this is one we should be looking at accumulating for sure over the long term. Don't ape, but definitely one we should accumulate, and also that Crystal token on AVAX soon will be massive. Yo, brother, what's up?
Hey, what's up? Can you hear me?
How's it going, bro? Yeah, I can hear you loud and clear, bro.
Yeah, cool. I've been involved with OxDAO from the beginning. I was just wondering if solidly is something that anyone should look at the moment.
It's an interesting question. Personally, I'm not in solidly just because there's too much uncertainty around it right now. OxDAO did release their V2 token, as you probably know. So that offers additional utility. So I think the best way to play OxDAO is certainly one of the best ways to play the narrative. In terms of solidly, I think SolidX is taking over with that handover soon. But look, personally, I want to wait for a few more details on this. We don't have all the information right now. I just want to see how the handover will work, what their plans are for the future before aping. But look, if you've already got money in solidly, I wouldn't be like panicking out of it or anything. But OxDAO is an interesting play, man. It's certainly an interesting one to look at here. I think this is the V1 token. But yeah, it's an interesting play, bro.
Yeah, sweet. Thank you.
Thank you, brother. Just remember, guys, if you want to add yourself to the stream, just make sure your camera's on as well. Let's keep taking some questions here. Looking through the questions right now. If you have any, you can also post them in the chat. I'll take a few more questions before I head off here. Julie's going to AVAX too. Yeah, I just talked about that. It's going to be massive for the ecosystem to have that Crystal Veil launch. I'm very, very excited to use DeFi Kingdoms on Avalanche. I think it's a massive opportunity as well. Let's just look through some other ones. Verasity, I do like Verasity as a play. Once again, I'm not the gaming expert here, but I do like the entertainment factor that Verasity is offering. We've obviously seen centralization with social media is a touchy subject, so potentially it's a good it's a good way to play that narrative as well. And it's also down quite a lot from highs, so I don't mind Verasity as a project. But yeah, Hustle's the expert when it comes to gaming projects. Share your thoughts on Oath. Okay, this is what we're talking about right now. The Fantom questions. This is my domain. Oath. Look, it is down quite a bit. It's just, if you guys don't know, it's Justin Bebis's project. He runs Reaper, and obviously Byte Masons is what this project is all about. I actually should get Justin on the show next week to talk about some utility for Oath. Basically, by holding this Oath token, you're going to be getting access to all of like the upcoming Byte Masons projects. So you benefit from holding Oath for all of the incoming projects. I think it is a good play long term because I do believe in Justin. So betting on Oath is betting on Justin. He's a great developer. I personally use Reaper Farm. He is a very proven developer and he codes great. His coding is amazing. So I do have faith in this project. In terms of getting an entry, we are down quite a lot from the highs here because it has been fudded out with the rest of the Fantom ecosystem. If you're interested in accumulating Fantom tokens, this is on the riskier spectrum, and I hope I have the right token up here, but assuming I do, it is on the riskier spectrum of Fantom projects. So I wouldn't be going crazy, but if you want to have maybe 5% of your Fantom holdings in Oath, that's potentially a good move as well, because I believe it has potential as well. Guys, make sure your camera's on. I've got plenty of people waiting, but if you don't have your camera on, we can't add you to the stream. Thoughts on Anchor? This one's an interesting one because I think Anchor Protocol is, given what I just talked about before with the sustainability of Anchor and also with Do Kwon's kind of mindset behind bootstrapping liquidity here, I think the ANC token itself is going to be a good performer as long as Anchor continues to establish itself as the major DeFi protocol on Luna. It was at 589. We're coming back down to 289. This was pumping significantly after the yield reserve was topped up here, but I'm not sure if it's something I want to enter right now just because the Luna price has pumped so heavily and so have these ecosystem alts. I do prefer to consolidate something like an Anchor at a slightly lower level. It's fully diluted is 3 billion, so it's not exactly cheap. Just to put this in perspective, Fantom, the L1 Fantom, almost has the same fully diluted as Anchor. So when I look at it from risk reward, I'd honestly just rather stack Fantom personally, but hey, it's a decent play as well. Let's go through here again. We do need cameras on if I can add you guys. A lot of you are here, but no cameras, eh? Hi. Get those cameras on and I'll add you. Here we go. How are you going, bro?
Hello, I'm good. How about you?
I'm good. Where are you from?
I'm from Cyprus, but right now I'm in the UK.
Oh, nice, man. How's it going over there?
It's good. I'm about to go to uni, actually. So,
oh,
yeah.
Really?
Yeah.
What are you studying?
I'm doing maths and statistics.
Nice. You'll be all over the stats when it comes to the DeFi stuff, huh?
Yeah, I've been trying to look at stocks and crypto, like with ascending triangles, and look at the probabilities, like where it's going to break out.
For sure. It's a really good thing to be into. We're very early in the space. And that also goes for all of you guys watching this. We're super early in this space. So the fact you guys are even here asking questions, you're a million miles ahead of the rest of the world right now. Do you have any specific question you'd like to ask?
Yeah, I'm looking into Cartesi and I want to see what's going on with it.
How do you spell the token?
CTSI.
CTSI. I think this question was asked on Sheldon's show yesterday as well. I'll be completely honest. I've never heard of this token. I think I've heard of it once, so I'm not too clued in on it. If you want me to look at the price, it looks like basically like every other chart in crypto right now.
Yeah.
So I'm assuming it's on Ethereum and it's in the Polygon ecosystem. So it's on Matic, I'm assuming. The Matic narrative is strong. I would need to look, I can bring up the website here. I'd need to look into this project a little bit more before I can give a proper opinion on it. But what are your opinions on it? Is there anything you'd like to share? What do you think?
I think it has a lot of potential because it's a really low market cap alt. So I think there's a lot of upside to it. And since it's on the Ethereum chain, then
What does it do? What's it,
I'm not sure. I don't remember.
That's fine,
It's been
bro.
a
So
long
my
time
number,
since I've researched it, but
sure. I mean, my number one tip with researching projects would be like, have a look at what they're doing. Maybe get into the Discord, ask some questions to the devs, find out like what they're actually doing and what they're working on, what they're building. Because just because something's a small market cap doesn't necessarily mean it has upside. I know the fully diluted here. It's not actually that small. It's 300. I actually have heard of it, but I just don't really have my head around it. But if you are interested in researching this, maybe you just have a look, get into the Discord, the Twitter, ask some questions. And yeah, I'll have a look into this after the show though, bro. Thanks for the tip there. Nicholas, I saw you had your camera on. I'll add you right now. How's it going, bro?
Hey, how are you? I'm a big fan of you. I've been watching you since before you joined Banter, the crypto.
Oh,
Banter.
really?
Yeah,
I appreciate it, man. Back in the old days.
Yeah. It's not that long ago, but
like
yeah,
2 months,
Yeah.
like 2 or 3 months.
But yeah, I've just been learning off you guys. I'm young. I'm pretty young. I'm 19, so just constantly trying to learn in the space. Obviously, I don't have that much capital, but yeah, I'm much appreciated for always giving us a head up in the space, always being the first one there. You know, it's good to have
Thanks, bro.
people like you.
You're only 19, but I mean I'm only 21, so
Wow,
we're,
really? I
we're
didn't
not
know
actually that far apart. And also, when I first got into DeFi, I was 19. So if you don't know, I'm from Australia, so we had a lot of these crazy lockdowns in like 2019, 2020.
Yeah, my
so
brother was living there, so I was well aware
Oh.
how bad the lockdowns were. Yeah, it was
Yeah,
terrible.
man. So all we could do was really like study crypto and DeFi. Like we're locked in our room for 2 years. So man, when I was your age, 19, that's when I got into DeFi and crypto. And like you'd be crazy. You wouldn't understand how much you can actually learn in a year. Like it's insane. If you really dedicate yourself to it. So man, you're super early. It's like to be 19 already in the space. That's a big win.
Yeah.
sure.
And I first started like probably like a year ago, and then gone to the basics of crypto, and then slowly started getting to DeFi. And you fall into that loophole and you just keep on going and keep on going. But yeah, I love it. I love DeFi. DeFi is fuck. It's gonna be sorry, my bad. It's gonna be a huge.
What's your favorite project, man?
Right now I really like One Ring. Have you heard of One Ring?
I have. Yeah. That's the Fantom one, yeah?
Yeah, on Fantom. It's a stablecoin yield optimizer. I love it.
I actually had a chat to the team the other day. I was supposed to talk to them again. They're a very, very good team. I think they're German. I think they're European.
Yeah. I looked their team at they're KYC'd, so I looked into all the team. I was able to see research a little bit, and it looks stablecoin. It's so much room to grow still. The next year, huge with stablecoin. They're still like so little compared to where they should be. So I think
man, I agree. I think it's a really good protocol. I'm not invested, but it's been on my radar for a long time. I might check in with the team there, see what they've got, see what they're working on. It's a good one. Do you have any other questions you'd like to ask?
No, nothing much. But thank you so much for having me. It was nice to talk to you.
No, very nice to talk to you, man. Good luck. I mean, you're super young, so there's a massive space ahead for both of us, really. We're both youngsters in this space.
Yes, for sure. I'll keep following, and thank you for everything again.
Thank you, bro. Appreciate it. Everyone waiting, turn on your cameras. All right, we need the cameras on to add. But I'll take everyone's in here with no camera. I'll take a few more questions from the chat, and then I probably do have to wrap up. Otherwise, Rand's going to yell at me for going over an hour. So we got to wrap it up soon, but I do want to answer a couple more questions. This is a really good tip in the comments. Discord is definitely key. Certainly. I mean, I learned 90% of what I know, or maybe not 90, but like a lot of what I know just from asking questions on platforms like Discord, because what it gives you is direct access to the team. So if you are researching a project, you can look through all the metrics that are public, but then to get a real sense of where a project's headed and a real sense of what they're building, talking to the team directly on platforms like Discord is like your number one way to be able to get exposure to new projects. And just as we're talking, this Bitcoin price is pumping. We are getting a big pump from Bitcoin right now, we are breaking through the 40. Perfect timing, guys. So this is ahead of the FOMC meeting, which is tonight, and that will dictate what the rate increase is. But the Discord, the Bitcoin price is going up, so that is good to see. Hopefully we can break this 41K range, because this is kind of been a major point of resistance for us. If we can break past this resistance level at 42, that'll be massive. So let's just keep our eye on that. John, how's it going, brother?
Hey, buddy. Yeah, good. Great to be on the show. I was one of the guys who was tweeting you, telling you should have upgraded your bedroom, and it's good to see that you've got a proper background now. It's awesome.
Oh, that's hilarious. I mean, yeah, Banter's certainly upgraded the setup since those early days in the bedroom. But I mean, you're an OG, brother. You're watching.
No, I know. I've been around for a while, dude. So it's good to see you here on a great show as well. So anyway, listen, I'll go straight to the question. Look, I'm basically a financial equity guy, right? And I've always been looking at valuations and stuff, particularly at the crypto market. And I'm just curious to ask you, like, how do you value these things? Because you can look at total supply and fully diluted market cap and stuff, but ultimately, we don't really have a sense of kind of earnings power and stuff. And so I'm kind of curious how you look at valuations of a lot of these cryptos, because ultimately that's really what it comes down to. And you can compare, one level one with another level one, look at total value locked and so forth. But just curious to know how you look at these things.
I mean, that's a really, really great question. I mean, all of us in the space, and what I do is I do a lot of cross-crypto comparing. So there's really two parts to this question. The first part is, how do you evaluate like an L1 or an ecosystem project versus other similar projects in the space? And then the second part to that question is, how do we actually evaluate it to the real world, which is the much harder question to actually answer. The first part of the question is quite easy. I mean, yeah, we look at the fully diluted, we look at what's happening on chain in terms of TVL, address growth, wallet growth, and we can kind of look at transactions and get a good feel for where the narratives are shifting. So DeFi Llama, CoinDix for yield, Token Terminal, all these great tools that I've talked about in previous videos are great ways to cross-compare projects in terms of looking at like an AVAX versus a Solana, right? The question gets a lot more complicated when we start taking into account like traditional markets, equity markets, derivatives, etc., because the crypto space is so new. So I think you're fully aware that it's still largely speculation. Like some of these chains have $50 billion valuations, and they're only doing like $1.5 million in daily transactions, right? So the bet here is that they can maintain the current level of growth, and that in 5 to 10 years, then when they have real network effect, then they will be accruing the same amount of users as like an Apple or a Microsoft would. So the answer to my question is it's highly speculative. We don't really have many metrics to cross compare between crypto and TradFi, because that's just not the stage of the market that we're in. We're in the early days right now, and a lot of it is speculation driven. But we can look at what's kind of happening with network effects to kind of dictate our valuations here. If we look at some of these bigger markets, like stocks have $100 trillion market cap, derivatives is a quadrillion plus dollar market, right? So when we look at crypto at 1.7 trillion, and we look at the effect that blockchain technology can have on the world, 1.7 seems very low compared to the scope it has against stocks at 100. So that's kind of what I look at when I'm saying we're still early. We're relative to the size of other markets, we're very, very early. All it's going to take is one of these projects to take off in a mainstream way, to start commanding some of these traditional stock valuations like Apple at 2 trillion, etc. So yeah, I hope that answers some of the question. But yeah,
no, I think you did a great job, and this whole network effect, and which is crucial, which is why I guess the narrative is so damn important, and all of you guys talk about it on all of your shows, and I think it's the right thing to be focusing on, and if you can, hence why you do your own research and understand the projects, and there's ones that can really capture the imagination of the globe, whether it's through DeFi or through the metaverse or through any other kind of real world application. I think will really stand the test of time for some of these projects. But look, anyway, keep doing the brilliant work. I think you guys, all of you, despite FUD and stuff, are really doing a lot for the community. So really appreciate it, and keep it up.
Thank you so much, bro. It was great to talk to you. Really good question. Really good question there. Because yeah, that's exactly what it is, guys. We've got to look at how early we are in crypto in terms of the overall market cap. Very easy to get short-sighted in this market and look at a 10% move, like the Bitcoin price now at 40K, when in like 5 to 10 years, the move from 40 to 30 or 40 to 50 is going to look minuscule compared to potentially, a $500 million price per Bitcoin in the future. So we are still at a very, very early stage in the space. Mohammed, I see you've been waiting for a little bit here, bro.
Hi,
How are you going?
I'm going good. I'm going good. I'll jump straight into my question. So I was looking at this thing called Platypus Finance on Avalanche. I thought it was really cool. It's like boosted stablecoin farms and stuff like that. So and now they're having this thing like a curve wars type thing, but like it's not exactly that. It's like they're calling it the Platypus Party. I think it's really cool. I think I wanted some input on it. So maybe you could check it out.
I love Platypus, one of my favorite projects on Avalanche. I think, yeah, it's great. They're probably, I said before earlier in the video, when I look at stablecoin farming, I look at it like Anchor. Then after that, like probably Platypus is probably my second favorite place. You got One Ring, as was mentioned before. You've got 100 Finance as well. But when we look at stables, definitely Platypus Finance is one that I am looking at as one of the biggest plays here. Token price, look, it has pumped a lot. I must admit, I did miss the opportunity to accumulate this.
Same here.
Yeah, I missed it as well, bro. So I didn't quite get in here, but yeah, their VE-PTP model, I've talked about this in the past on the show. It's basically, their version of Curve. So we get this kind of boosting effect through holding, locking up the PTP tokens, and then you can boost. I mean, there's some insane rewards on stables right now. Compared to other protocols, like just the median boosted here is 21.9. So cool. You don't even need that many Platypus tokens to get that yield.
Cool,
I think
man. It's so cool. Yeah, I agree with you.
But I must say, Anchor still seems better. 20% versus 21%, and having exposure to Platypus.
It's debatable how sustainable Anchor is compared to this, right?
No, I agree. So that's the thing with stablecoin farming. You don't want it all in one place. So you can have some in Anchor, but yeah, you're right. It might be worth diversifying into a Platypus with some of your other funds, because you don't want all your stables in one smart contract, of course.
Yeah, for sure.
So no, it's a really good one. It's really,
really good one.
You think
it's in the accumulation zone right now? Like, is it a good time to start picking up like big bags of PTP?
Not big bags. It's in a DCA zone. It's probably in a place where I'd be putting like 5 to 10% buys of your. So if say you want $10,000 in Platypus, just for an example, then I wouldn't be putting more than like $500 in sporadically at the moment. So like try and keep it in that range. But however, if we do come down to this kind of $2 zone again, that's my big top up zone. I guess my fear right now is that we've just got so much macro uncertainty in the market. So like we are seeing Bitcoin pump, but like the FOMC meeting in 12 hours, it's going to go a long way to like giving us a little bit of direction here.
If you don't mind me asking, what are you thinking about the FOMC today? Do you think it's going to be like a little positive towards TradFi, or do you think it's going to be more bad?
Well, what we're seeing right now is obviously the market is pricing in 25 basis points. I doubt we stray away from that. I'm 90% confident that is where we're going to see the rates settle. In terms of how the wording is conducted, I mean, it's anyone's guess because we've been shocked before, but the wording will go a long way to determining how the market reacts, because we know it's going to be 25 basis points. But if they come out extremely hawkish, that could be a bigger issue than just the rates themselves. So I don't think, I'm actually expecting things to be quite stable. I think we have a pretty good idea of their approach.
Because throughout this whole dip, I haven't seen something like Platypus or, smaller, something like Platypus, especially because I'm majorly in Platypus. So I haven't seen a dip like that. I saw it did dip initially, but like since this bad period, it's just been, I think it's because it's a stable coin farm and it offers so much, value in this bear market. But I don't know whether it's going to go down, whether I should get off some bags right now just to limit my risk. I think maybe I should take some bags off right now.
What percentage of your portfolio is in cash, stables or cash?
Like 30%.
So you're actually not sitting at a terrible level. So it really comes down to what you think.
I have profits in Platypus, so I could just take it off right now.
Always take a little bit of profits gradually. I don't know if right now is the time to be making rash decisions in terms of like selling a significant amount or buying a significant amount, but probably gradually just ladder, take some small profits. You said you're sitting in 30% cash. That's very good. I'm 20 to 25, so you got more cash than me right now. But I think that's a good level to be sitting at. You don't want to have no cash. You definitely want to have cash, but
for sure.
People in 50% plus cash right now, I would question their logic, just because if you have conviction in the space long term,
It's already
the best
50% down. I mean, how much lower is it gonna go? I mean, and you can see that it's holding at 38,500 like really well, meaning there is someone sitting there. I mean, there's a lot of people sitting there right now. It's not like, and I feel like it's those people with conviction. I mean, it can always turn, but it's just so odd. The holding behavior to me is so odd that 38,500 is so stable. It's just so stable. It's making me really confident in 38,500. But let's see.
It's looking good. It's looking good, but as I said, the macro factors we can break that at any time. Look, for a while I've been saying potentially coming back to the 30 to 32K region. Yeah. That's where the main support is. Like, there's big institutional buyers, and like even I know people personally, they have massive orders at 30K. That's the level that is going to be like very impenetrable unless there was a black swan. Yes, it could drop below, but like that is the real rock solid zone right now from what I've seen and what I've heard anecdotally. But if you're talking about 38K, that is a good short-term support. Yes. We've seen 36 to 38 being a good short-term level of support. I'm not a huge fan of loading up on those levels. I mean, pretty much my thesis when it comes to buying dips is like buy on an extremely red day. So I bought the dip, this 34K dip on the invasion day. That was the day I was buying. I haven't done much buying since just DCAing slowly. So if you're talking about buying, I'm always buying. Like, I'm always farming. I'm always making small buys. But if you're talking about buying, like I'm talking proper money coming in, big buys, you want to be doing that on the reddest of red. 38K doesn't stick out to me as that. But 35, 32, if there's like a massive 20% downwards candle, then that's when we start going heavier. But awesome. I wouldn't ape now.
Thanks so much.
Thank you very much.
Yeah.
All right, one more question, and then I've got to head off. But it's been awesome to speak to you guys and take your questions. Really interesting insight here. Daniel, how's it going, brother?
Oh, I didn't think I was going to get on.
You're getting on.
Perfect. So I'll just go straight to the question I've got for you, Miles. It's about Mars protocol. What do you think about it? And also, it's got 1 billion total supply, so a fully diluted of about 600 million. How's that looking compared to what you think as a price target?
So firstly, I'll just talk about the fundamentals. I mean, with Anchor being so limited in the amount of collateral options they have, I think Mars as a borrowing lending market is going to offer a massive scope for growth there, because it's going to have multiple assets, kind of like an Aave. It's going to unlock kind of a new way to borrow and lend on Luna, because right now we don't have much. So I think Mars does fill the gap in the market for Luna. But as you said, that is relatively priced in with the fully diluted valuation being quite high. In terms of accumulating, did you participate in the lock drop?
No, I missed it by 1 day. So
Which is a good thing. I didn't participate either, because locking your tokens up for UST up for a couple of years versus keeping it in Anchor is kind of questionable in this market. If it was a bull market, I would have been probably a bit more interested, but it's looking uncertain. So in terms of accumulating Mars, we kind of saw this with Astro. Now, I'm not saying this will happen again, because look, they've probably learned from Astro's mistakes in terms of launch. But if I just get the chart up here, when Astro launched on Luna, we saw this kind of zone. So they did their kind of version of the lock drop where they were airdropping tokens. Then they came down here, and there was like massive accumulation. So this happened a few months after launch, and it was kind of bottoming out here. And then it spiked back up in a massive way as this Luna narrative picked up. Astro's kind of like the blueprint for how big projects launch on Luna. So I would, this is just my prediction and I could be wrong here, but I've always expected Mars to potentially come down a little bit and consolidate post-launch, just because when new projects launch, there's a lot of hype. But once we do get that consolidation zone, it's a project that I think is a must own, as long as it rolls out correctly. My view with it is kind of like, I'd rather see it launch, and I'd rather see the sentiment and how it actually functions before taking a large initial position or locking up funds for a long amount of time without knowing how it'll play out. So I love Mars. I think it's great. I think it opens up massive opportunities on Luna, because if you think about Luna DeFi, Mars, imagine all the strategies Mars is going to unlock.
Exactly.
Like it's
It just
going
seems like
to,
an anchor protocol with more options, doesn't it?
dude, it's going to like unlock so many opportunities, but that doesn't mean that the token itself is something to ape into right now. So there's a difference. But let's wait and see. That's my opinion on Mars.
So,
But it's
just
great.
quickly, Miles, before you go, what price would you recommend to get in at?
With Mars, so what's it at right now? Is it at 60
It's about
cents?
68. It's pulled back quite a bit from about 87 cents.
60 cents. Once again, it's really hard to make calls in this market. I'm just kind of loading the graph. Our internet here is a bit dodgy, but just off the top of my head, considering the launch, 60 cents. I mean, if I'm being really picky, probably like 30 to 40 cents is a more interesting zone for me personally, but that could change. It really just depends on the launch, man. 30 cents right now, but in a week's time, if you ask me again, I might have a different opinion. So just monitor it. I mean, if you want to take an initial position of a small amount, like by all means, go ahead. Never a bad idea, but yeah, that's what I'm doing.
That's great. Thanks for getting me on.
Appreciate it, brother. Thank you very much. All right, guys, that was an absolutely awesome show. Thank you so much for coming in and asking your questions. Sorry if I didn't get to you with the questions. There was quite a few people in. But yeah, thank you very much. I think that was awesome. We covered a lot of ground then. Obviously, we got this FOMC meeting in 12 hours, which will be big news. Actually, it's less than 12 hours now. That'll be big news. So keep your eye on the markets. We are getting the Bitcoin price pumping as we speak. So let's hope it can continue. Thank you very much for watching. I will see you tomorrow. Peace out. I'm still live, but yeah. That was an hour of straight talking, guys. No wonder my mouth's